Thank you, Jimmy, for becoming a member. Yeah, y'all don't have to go anywhere. As soon as I close this stream, we're going to start the meta stream, and it's going to immediately pivot you to the meta stream. All right, as soon as we end the stream, it's going to bring you to the meta stream. If it doesn't, just go join our meta stream. It's on the channel. We just started the stream right now. So again, it should redirect you directly to the new stream here. If it doesn't, let me know. We'll send you the link. All right, guys. So we are here. What's up, Jimmy, my guy? What's up, dude? Man, Bears are big mad today, bro. They really are. Bears are super mad. Here's Meta right now. Meta is up to 152s today. That was a fun stream, man. Oh, yeah, definitely the best golfer in the world right now. All right, what's up, guys? So it should redirect should have worked here. Let me make sure it did. Let me know, did the redirect work? Yeah, there we go. We got 400 people here. What's up, guys? All right, team. Hope you guys doing well. Again, Meta popping up today. Market doing really nice. My Snapchat trade. Hey, listen. Ooh, my Snapchat dip buy is looking pretty nice right now, guys. We are up like 40 cents a share. Buying that snap dip this morning. Or maybe it was yesterday. I can't remember when we bought Snapchat. But buying that dip has worked beautifully so far. Didn't work for me. Oh, that's weird. Okay, cool. Snapchat worked. Let me get some music playing here. Again, Meta earnings will influence the market here. You know, maybe this will give another little boost. Maybe it tanks the market, guys. We really don't know. Let me know. All right, so Meta earnings drop after the bell at 4 p.m. Eastern Standard Time. All right, be sure to sub to chat. Glad to see almost 900 are here hanging out with us today. Well, the market keep bouncing, guys. We're going to throw it in sub-only mode, so if you have not already here, team, my eyes are still hurting, bro. All right, we just put it in sub-only mode, so if you have not already, what are you doing here, guys? If you haven't subbed already, I don't know what y'all are thinking. Hit that subscribe button, team. We're at 98.6K. Yes, Stefan, this is live, bro. Yeah, again, what you guys got to understand is that Bears are big mad here, man. Bears are big mad. Like I said, Jerome Powell said very optimistic signs during this meeting. You can find little pockets of negativity in those, in his words, but again, very optimistic signs. The whole market's reacting positively for a reason. Is because most people, when they hear what Jerome Powell said, they're going to interpret it as positive. Of course, Bears are big mad. Everybody wants to be Michael Burry, but like in the end, very few people actually are. And even Michael Burry's been wrong about a boatload of stuff. So in the end, I'm not saying the market's not going to drop. I'm not. What I am saying though is that nobody knows, and betting everything based off of somebody's bearish sentiment is not the right move. You got to just understand the market as a whole generally goes up long term. The market's been down in a bear market for over a year now, and in bear markets usually do not last forever. And so, like, in terms of probabilities, I've been saying this for months and months. The probabilities are probably on the upside based off of how far we've been down over the last year, based off of inflation pressures easing and all that stuff here. I just thought that it looked more optimistic, and I think that's what we got here. And again, maybe I'm wrong. Maybe we end up tanking back down, but overall the markets look good last few days for sure, especially during the press conference. I thought they said very positive things. Thank you, my guy Mac. Hey, shout out to Mac. Shout out to Jimmy. Thank you guys so much for becoming a member. So yeah, meta expectational numbers here. What? Bro, are you serious, dude? Bovada, stupid, bro. Oh wait, Bovada. There we go, fixed it. All right, guys. So we got Meta earnings today. Meta earnings are at 4 p.m. Hey, thanks, Mac. Yeah, Snap looks good, man. Again, I'm up about 40 cents a share on Snap. You love to see it. Meta earnings are at 4 p.m. Eastern Standard Time. We're going to put the results up. Meta is expected to show up at 212 EPS on 31.8 billion in sales rev. At 31.8. Also, we're going to get a poll going live here as we always do. We're going to put this data up on screen. Meta beat or miss. All right, there is the poll. Vote on that poll. We're also going to do a Twitter poll here. Calls or puts. All right, market's starting to pump up to test highs here. Did we get our poll out? Let me make sure. Oh, no, we're good. We're doing them. Calls or puts? All right, so Meta. All right, so we're doing the SPY. We got the Q. We got SPX. Stock market. Let's see. Again, hit that like button here, guys. We got about 820 people here now. All right, so Jerome Powell, 25 basis point rate hike. All right, we got this poll going live here as well. Looking at the polls here, we got 57% of people think we're going to miss earnings, 30% think we're going to beat it, about 14% think we're going to have mixed results. I'm going to go with mixed results here as my guess, but I'm not 100% sure. Of course, you guys know. Again, if you want to vote on our Twitter poll, also give your boy a follow on Twitter. Here is the link for our Twitter page. Again, I mean, I think what happens here is like you got people who make really bearish predictions, right? And then instead of being able to look at it and be like, yeah, I was probably wrong about number one. A lot of people said we were going to get 50 basis points, and a lot of people have been basically calling for a market crash, right? And then when you have Jerome Powell basically say he doesn't think we're going to hit a recession this year, and that he sees inflation signs easing, they find small little nuances of what he says and say, oh, this is a terrible report, even though it's like the broad mass psychology of the report is positive. The mass sentiment of the report is positive. The market is ripped up from this report basically on that sentiment. And it doesn't necessarily mean it's not going to crash. Crash is still very much a possibility. But I think, like I said, I think it's very... I don't think it's very easy to predict at all. And I think acting like we know 100% what's going to happen is, usually people trying to, have confirmation bias with their own positions. But Daniel, again, maybe you're right, brother. Maybe you're right, man. And again, like I said, bears, maybe y'all are right, man. Again, y'all might be right. But again, acting like we know for sure, like it's a certainty, is not accurate. And again, most of what he said was positive. At least his tone was positive. And it seemed positive and optimistic that we weren't going to hit a recession and that inflation was going to get better and so forth and so on. Market just broke highs. Again, look, the high break at 411.80 just now on the SPY. So SPY's pushing up to accompany this. Now, again, it's all going to be dependent on what happens for earnings tomorrow. Again, we got Google, Amazon, Apple earnings tomorrow evening, and that's going to dictate what happens in the market for sure. No, I'm not going to buy Meta if they tank, probably. Again, we're in Snapchat. We're up about 40 cents a share right now on the dead buy that we got involved with. Yeah, if you want to trade, you want to predict. Yeah, react to what happens. You don't want to try to predict what's going to happen. Again, so many people... Again, and bears, listen, it's all love here. It really is. Like, maybe y'all are right. Okay, but like the thing to understand about me is that I have a very unique perspective here, bro. I got people coming in here every day telling me the market's going to crash. And so when you got people coming in here every day saying, oh, the market's going to crash, and then it doesn't. Oh, the market's going to crash next week. Just watch. Oh, it doesn't. Oh, the market's going to crash for the Fed rate hike decision on Wednesday. And then we fly up. Oh, the market's going to crash because of what Jerome Powell says. He's going to be bearish. And then it's not. Over time, it's like, okay, you got to look at it objectively and say a lot of people have their favorite YouTubers and influencers who have their egos just super high saying, oh, the market's going to crash. The market's going to go to zero. You got Michael Burry over there saying sell, giving an ominous sign ahead of the rate hike decision. And then we rip up like this. It goes to show exactly what a lot of people said, including me, which is that when I see everybody call in bear, I'm usually looking at the other side of this. And the market has flown up from it. And I think at a certain point, you got to say, okay, the market didn't crash like I thought it would. Michael Burry's got to go out there and be like, yo, I was wrong about my sell ominous tweet. Of course, it's never going to happen. And understand, like, influencers don't know everything. Sometimes they're going to be wrong. A lot of them get these big complexes where they think they just can't be wrong, and market crashes are incredibly difficult to predict. So again, I'm always like, hey, I have no idea what's going to happen here. No idea. I might be wildly wrong. Maybe the market does crash, but I certainly don't think it's a certainty. I think it obviously could continue going up. And markets, as I'm saying this, market's breaking highs. Yeah, I mean, listen, if the market crashes, I will buy up stuff. What I'm saying is I'm cautiously optimistic. The market, there's a lot bigger problems than just value buys for me if the market crashes. People suffer when the market crashes. I don't want the market to crash despite, valuable buying opportunities. You know what I mean? Like, I still would prefer the market not crash. Market crash is probably better for my channel. It's more action. Everybody kind of tunes in to watch a fire, you know. But I'd rather the market not crash, you know. The Bears have said it much more than the Bulls, Tammy, for sure, 100%. Like I said, I run this channel. We generally get over 500 people there live every morning during the big reports. Like I said earlier, for the Fed meeting, we had like 3,500, 4,000 people there. We have way more Bears than Bulls at this point in time. And again, at a certain point, you got to just look at it and say, okay, everybody that said we were going to crash during the Fed meeting, you have to look at it and say, okay, you were wrong. And that's okay. That happens to everybody. Everybody's wrong sometimes. I certainly am wrong. I was saying Tesla. I didn't like Tesla at $105. And of course, I was wildly wrong about that. So sometimes we are all wrong. But, like I said, in the end, you have to look at it objectively and say, okay, well, the influencers I'm following that are all telling us the market's going to crash during the Fed meeting, they were wrong here. Now, maybe we crash in the distant future. That's certainly possible. We got CPI on the 14th. Maybe that's bad and the market tanks from it. Certainly possible. But for now, markets are moving up. What Jerome Powell said, I mean, you could find pockets of negativity in what he said, but you could also find a lot of positive things about what he said too. And so I don't think looking at it like, oh, everything he said was bad, that's just not accurate. He said that he sees inflation signs easing, that he's optimistic for the future, that he sees economic growth in 23. He said a lot of positive things as well. And so market, again, you can look at how the market responded to this and understand the broad sentiment from what he said. Market has responded overwhelmingly positive from this. Most people, when they hear what Jerome Powell says, again, unless you're incredibly biased to the downside because of extension and positions and confirmation bias, you're going to look at what he said and say, okay, well, that was mostly positive, and that's what the market's doing. Market just tapped 413.40s right now, ripping up, flying up here. So yeah, I'm not one-sided. Like I said, market might crash. I have no idea. I'm neutral almost always. Rich man, you sound like a 5-year-old, bro. Yeah, 100%, Tammy. I mean, I agree with you. I'm not really a bull. I mean, I want the market to go up, but like, I understand. I've said this before. I'll say it again. I think extension plays a factor. And I've been saying this for months. I've been saying this when Disney, again, I said this earlier. I've been saying this since Disney was at $84, since Google was at $84 or $85. I was very accurate. And again, maybe I'm biased because when I said these things about Disney and Google and Amazon and Apple, when I said these things, bears made fun of me. They called me a clown. They acted like, I was just dumb for buying Disney at the $85, $90 level. Now Disney's at 110s. Same thing about Google at 85s. Now Google is at 102s. You know what I mean? And so I think whenever people make fun of your position so much and you turn out to be wildly correct with your positions, and then you still hear bears come out saying, oh no, the market's going to crash. I think it does start to kind of chip away at me. But again, I also understand, like, listen, maybe we crash. Certainly possible. I hope we don't, All right, yeah, 20 minutes before the Meta earnings are out, 20 minutes. Did Burry delete? No, he did not. Did he really? Because Burry knows he's about to get stormed. Again, this is why you can't idolize one specific trader. Don't idolize me, bro. I don't want y'all to idolize me. I don't think anybody really does. But, like, again, I'm consistent with what I say. Like the last 4 months, I've been telling people we don't have to crash. The market might just continue pushing up. I'm buying stuff at the lows, Disney, Google, Amazon, Snapchat. I bought Snapchat yesterday. People said, what are you doing, bro? Why are you buying Snapchat? Up 40 or 50 cents a share now. So, in the end, you got to learn to just ignore people and take your own trades. Market just broke highs again at 413.50s. Google pumping up at 102s. Looking at Meta here. Meta started to test highs as well up to 153.30s. Definitely top 3. Yeah, definitely top 3 most level-headed traders in the world right now. Definitely top 3. My humility is getting towards the top 5 as well. I'm super humble, you know. I don't think there's a more humble trader than I, you know. But I have to work really, really hard and just, you know, be super, super intelligent to be as humble as I am. And, you know, it's hard when you look this good. Market's pulling back. SPY is still holding, or Meta's pulling back. SPY is still holding over 413s. Yeah, all good, Derek. Like I said, we get a degree to disagree on the direction, bro. You know, it's all love here, man. SPY push it up. Again, here is the daily chart of the SPY right now. Market has effectively broken out of this trend, and we got a nice little few days. Honestly, the volatility's not over, though, guys. It's really not over. We got a lot of stuff happening right now. Specifically this week, we have a lot of stuff. So we had the Fed rate hike decision. Tomorrow, we got Meta earnings that are dropping in about 15 minutes. Tomorrow, we got the Bank of England rate hike decision, which will be relevant for the broad world economy. We have the ECB press conferences. We got jobless claims numbers, non-farm productivity numbers, building permit data for Canada. We've got, again, we got jobless claims tomorrow. We got Amazon, Apple, Google earnings tomorrow evening. And again, Apple is the largest percentage of the S&P 500, so it will move markets. We'll see what happens there in that regard. And then Friday we have unemployment data and non-farm payroll data. So a lot of stuff happening over the next couple days. Still, even after this, the rate hike decision. Again, Meta earnings coming out, but the SPY has flown up today. Apple has, what is Apple, like 13%? Let me look. I forget what it is. I know Apple's the largest percentage. Apple is... Oh, I'm sorry. Apple's about 7.1%. My bad, 7.1%. Tesla, I remember, is number 6. So Apple is 7.1%. Microsoft's number 2 at 6%. Amazon's 3.7%. Tesla's 2.4%. Tesla's number 4. Google is number 5 at 2.2%. Class C Google is number 6 at 2%. Nvidia is number 7 at 1.8%. Berkshire Hathaway is at 1.7% at number 8. Meta is number 9 at 1.3%. So Meta will influence the market if it, you know, if it has like a big miss or a big beat. It should influence the market as well. Meta started to test highs as well, 153.39s. Yeah, Michael Burry deleted. I try to tell people, man. I try to tell people, bro. Yeah, Burry deleted again. Oh, no. There's Michael Burry. Wait, did he delete it? Oh, no, he didn't delete it. There's Michael Burry. Or no, this isn't Michael Burry. This is a fake Michael Burry. Michael J. Burry is his handle, at Michael J. Burry. Michael deleted his tweet. Remember, there's a bunch of fakes right now. There's a bunch of fakes. So he deleted his. Not surprising. Looking at our poll for Meta here, we got about 42 votes. 59.5% are saying puts, 40.5% are saying call options. We did a vote here. We got, will Meta beat or miss? 48% think they're going to miss. 35% think they're going to beat, and about 17% are mixed on the matter. So no, Michael Burry, he doesn't have his page. There's a bunch of fake Michael Burrys, but again, Michael Burry's at is Michael J Burry, and that's it. There's nothing after it, and so there's a fake one with Michael J Burry BC. There's a few fake ones here, but again, it's fake. They're fake. There's not any real ones that I'm seeing right now. So he did delete his Twitter. It looks like he's gonna get trolled heavily because of what happened. And again, maybe we pull all the way back down and correct and come all the way back down. I mean, it's possibility here. You know, again, the earnings that we have over the next few days can completely turn the market. But again, it's going to be dependent on the earnings. So far, the Fed meeting has caused a very positive reaction here. But again, earnings are independent to what the Fed says, especially the next ones coming up, which are Amazon, Apple, and Google over the next few days, and then Meta today. And so if we get a bad string of earnings reports here, you know, the market might turn. And again, we'll see what happens. Let's look at the trend right now. We have this obvious trend here. Again, we made money today trading this, but we didn't buy it ahead of it. We traded the reaction to it. And again, you can see we're up about 540 on this, up about 540. We'll see if the market holds the trend. Yeah, Michael Burry is the guy that predicted the Big Short movies chain of events where Michael Burry and a few other analysts, financial analysts, basically bet big short positions. Michael Burry basically went around shopping for short positions on the mortgage market because he predicted a market crash based off of mortgages failing from MBS's mortgage-backed securities. And he basically went around to like Bear Stearns and a bunch of other big banks and bet tens of millions of dollars on the mortgage market and the broader economy's collapse. And it took him a while to, you know, be right. It took him a little while. He had to wait and play the patience game, but eventually he was right. And, you know, the market tanked in 08. He made billions from it. Still though, he's been overwhelmingly bearish since then, and again, he's been wrong about a lot of short predictions since then, and so I don't think you should base everything on what he says, to be honest, because again, he's just been wrong about a lot of stuff lately. But you know, maybe we crash again. The earnings today are what's going to matter the most. So far, I think it's pretty clear we've had a very positive reaction to the actual Fed meeting and rate hike, 25 basis point rate hike. Positive things said during the Fed meeting. But it doesn't mean anything yet. Maybe the market turns. We'll see. Snap was down yesterday. Yeah, I bought Snap after the drop yesterday. So we bought Snapchat after the drop. I'm up about 30, 40 cents a share on it. All right, guys, Meta earnings coming out in about 9 minutes. 9 minutes. Again, subscribe if you haven't yet. We're pushing towards 99K. Yeah, we'll see. We got a poll. 47, almost 50% of people in the poll think Meta's going to drop or miss earnings. Some people still think we're going to do okay. Yeah, well, Jerome Powell said he thinks that inflation is going to get better. All right, guys. All right, market's starting to pull back here. Is it time to buy the dip? I don't know. We'll see. Down to 410s here. Let's see if 410 holds. Big psychological level. We broke out of this recent trend now. Meta's dipping down. We still got about 7 minutes before the actual earnings for Meta drop. About 7 minutes before Meta earnings come out. Yeah, I'm not saying the markets are going to do anything. Again, I have no idea what the markets are going to do. I genuinely have no idea what the market's going to do. Maybe we crash. Maybe we push up. Maybe we dip. Maybe we, maybe we go sideways. I really have no idea. Meta earnings drop in about 7 minutes. 7 minutes. The actual earnings call will be streamed in about an hour. All right, guys. Meta earnings coming out in about 5 minutes, a little bit over 5, a little bit a little bit over 5 minutes. Oh man! And then we got the actual earnings call in about an hour. Whew, long day at the computer today, guys. Bulls are in FOMO. I don't know, man. Again, people say we're in a bubble. They say the market's going to tank. They say the market's going to crash, all that stuff, right? But I think when you look at the SPY over the last year, the SPY's down pretty substantially over the last year straight. And so what bubble are we referencing? A broader bubble than this? Maybe. And again, maybe the market crashes. But again, I think you got to play extension. Bear markets historically don't last forever. Eventually we're going to start swinging back towards a bull market territory over time. The biggest edge of the market is that blue chips in the S&P 500 go up long term and other broad market ETFs. 8 to 12% a year is what the S&P on average gives you. And so one of the biggest edges that you have in market activity and the market in general is generally, again, not always, there's always outliers to this, but usually healthy companies go up long term. Blue chips listed in the S&P 500 are generally going to go up long term. And so betting against that is a sucker's bet, in my opinion. Everybody wants to be Burry, but again, Burry saw an anomaly in the markets because of the mortgage market. But everybody's not going to be able to do that. And, predicting that like it's going to happen regularly is not, that's a once in a lifetime opportunity. And maybe we crash, but, there's also a possibility that we don't. It's definitely not a sure thing either. Meta earnings drop in about 3 minutes. Hey, what's up, Josh? Maybe, Sean. Maybe. Like I said, I'm not saying I'm the best trader in the world right now, but I'm definitely top 3. I'm going to preface this with, please don't copy me. I have no idea what I'm talking about. I'm wildly wrong about everything. But over the last 4 months, if you think about what I've been saying here, I talked about Disney being cheap at 84, 85 bucks. I talked about Google being cheap at 84, 85 bucks. I talked about Amazon being cheap at 84, 85 bucks. I bought Snapchat a few times. The first time was at the low 8s, high 7s. And we made money on all of those plays. And now Disney's at like 110, Google's at 102s, Snapchat is at 1030s, and the market is pumped up as we said it might. from that, you know. So again, I'm not saying I'm the best trader of all time, but I'm definitely top 3, you know, for sure. Don't copy me. I have no idea what I'm talking about. I might be wildly wrong about everything. Please don't copy me. Not an investment professional, not liable if you lose. Always make your own assessment, trade responsibly. And I am not liable for anything you do. Yeah, where's Bitcoin at right now? I'm sure Bitcoin's popping up too, right? Let me see. Bitcoin up to almost 24K. Hey, looks good. Meta has the most cost-efficient advertising in times of distressing marketing. Scales up on the highest quality. Maybe. Yeah, Meta's got some money to throw around, that's for sure. Instagram's still a pretty big thing too. The bigger question mark for Meta is regarding the metaverse, and that, you know, they invested a lot of money into the metaverse, and so the big question is that going to pay dividends for them, or, you know, are they just going to lose more? Again, I think social media platforms like Facebook have a very limited period of longevity where they're relevant. You know, they're just not super relevant for over a decade usually. Up and coming social media platforms. Again, I've said this before a few times really, but most of the time this stuff is generational, right? So where it's like, I use a social media platform, I have children, my children want to use a different social media platform than I do, because again, kids want to use newer websites. So like now Double T is making big things, and a lot of kids are on that platform. And so I see it as a generational thing where kids don't want to use the same social media platform as their parents. Now, I think YouTube is pretty immune to that because, frankly, Google has diversified well beyond any of that stuff, right? But I think for Meta, I think that is a very relevant, you know, topic, and I think it's something that they've tried to acquire a lot of stuff in the metaverse in order to get that young person vote, where they're trying to get young people involved, and so they're building up the metaverse, you know, in hopes that they're bringing more young people on their platforms. All right, so there's 4 p.m. There's 4 p.m. Here goes Meta. Let's see what Meta shows up here, guys. So there's 4 p.m. We also have a few other earnings today. We got Algin, McKesson, Aflac, Murphy's, AVNet, and a few other ones here. Let's wait for the Meta earnings. Nothing out yet. Meta is scheduled to drop at 4:05 p.m., guys. 4:05 p.m. Meta pushing up a little bit ahead of this. Nothing out for Meta yet, though. We're waiting here. All right, Meta's earnings are supposed to drop at 4:05 p.m., so in about 5 minutes or so, a little bit less than 5 minutes now, 4 minutes. Meta sideways so far at 153s. We had some other earnings that were dropping. I can cover those. We had like Algin, ALGN. They posted. I don't see anything yet. Just nothing else really big. McKesson, MCK, Aflac. But nothing else really drops at 4. Most of these drop at 4:10. So Algin posted. Nothing yet. You can see Meta on the right side at 153s here. Again, subscribe if you haven't yet. We are pushing towards 99,000 subscribers, 99K. Meta started to test that high up there. We're still waiting for Meta earnings. Again, Meta earnings. The call is going to be streamed here live at 5 p.m. Eastern Standard Time, and we're going to stream it live here just like the Fed press conference. The actual earnings are scheduled to be released at about 2.5 minutes. About 2.5 minutes, the actual Meta earnings are scheduled to be released here. Yeah, so there goes Meta, start to pump up. Nothing out for Meta. Meta drops theirs in about 2 minutes, team. About 2 minutes for Meta earnings. They're scheduled to release at 4:05. There's a big pop up for Meta. Let's see if they're out yet. I don't see anything for them yet, but I see the big pop up, which I'm assuming is because Meta earnings came out. Waiting for the actual numbers to reflect here. I don't see anything yet. Again, I'm looking on all three of my sources. Nothing yet for Meta, but they are ripping up to 155.30s here. That should be good for markets. Nothing yet. Let me check Twitter. All right, yeah, nothing out yet. I'm seeing some big moves, though. They're scheduled to drop in about a minute here. But I don't actually see any data for Meta yet. Nothing out on all the platforms I'm checking here. Looking at multiple different platforms, and I don't see any data yet for Meta earnings. Meta's looking strong, though. Just broke highs, kind of dragging the market up. What worries me is that the earnings actually aren't out yet. So we'll see if the earnings confirm that. I was hoping the earnings might be out because that would mean that Meta had good earnings, but the earnings actually aren't out yet. I'm not saying the data's leaked. I never say the data's leaked. All right, so we got a big bull response so far, waiting for the data to come out, which should be out right around now here. So there's the data release. Meta dropping from the data release here. Meta coming down on the data, waiting for the actual report to refresh. Okay, so Meta is out. Meta posted revenue of, let me see what this is. All right, they are flying up to 159s right now, flying up to 159s here. Let's see what they showed. I can see the actual earnings report. Scrolling down. All right, so net EPS of 176 a share for Meta, 176 a share, all the way up to 167. Revenue of 32.17 million, 32.17 million, 176 a share. So they missed EPS estimates, but their revenue came in higher than expected. So higher than expected revenue, worse than expected EPS. So I'm very, very curious as to why they're doing this. Higher than expected revenue, but worse than expected EPS, and they are flying up to 170s right now. SPY is popping up too at 411s. Fourth quarter sales came in at 32.17, beat the 31.35 billion estimate here. So again, we're going to put this number up in chat, but they beat on sales, missed on EPS. And yeah, interesting, to be honest. But hey, here is the full list here. They are flying up at 174s. I don't see any guidance numbers either. But 32.17 billion for sales revenue. Fourth quarter sales came in at 32.17 billion, flying up to 175 for Meta. Huge pop up here for Meta. Wow, look at this run. That's crazy. Daily active users are up to 2 billion, up 4% year over year. Daily active people up to 2.96 billion, up 5% year over year. Meta CFO sees first quarter 23 revenue guidance at 26 to 28.5 billion. So higher than expected guidance is really what's dragging this up here. And we'll put this up on screen. So higher than expected guidance. You can see the guidance numbers right there. We just posted it in the chat. The guidance are right there. So miss on EPS, beat on sales revenue, and a beat on guidance. That's what's dragging it up. Higher guidance and revenue for Meta here. And they're popping up. Fiscal year total expenses. We're going to fourth quarter monthly active users. We're up to 2.96 billion. They expect to spend about $1 billion in restructuring charges in 23. Again, Meta flying up here. 173 right now. SPY at 411.60s. Market's getting dragged up from it as well. So again, another really nice reaction. Fourth quarter ad impressions are up to 23% year over year. But basically, they missed on EPS, beat on sales revenue. They also announced a $40 billion buyback. So all that's good. So again, miss on EPS, beat on sales rev, better guidance than expected on the higher end of guidance. According to Benzinga, you can kind of see. According to Benzinga there. Let me fix this. Yeah, Meta pop it up here. Looks good. I mean, again, missed on EPS, but beat on revenue. Guidance was higher than expected too. So Meta's popping up. Dragging Bitcoin up too. Bitcoin's up to almost 24K. Meta, very big green candles here, and the market is loving this right now too, which is great. Meta has charges related to restructuring efforts at $4.2 billion in the fourth quarter. Meta fourth quarter capital expenditures. We're putting all this data up in chat so you can see it. And again, guidance came better than expected here. Meta just broke highs again up to 174.70s. 174.70. SPY bouncing back now. Yeah, daily active users increased. Guidance was positive. EPS was missed, but revenue was up. So they only missed on EPS. Everything else was positive. Guidance for the first quarter was positive. Revenue was higher than expected. EPS missed, but they also announced a announced a $40 billion buyback. So, you know, all positive things. Bitcoin getting ready to test 24K for the first time today. Bitcoin getting up there. All right, guys, testing highs again for Meta. Pump it up big. Again, do me a favor. If you're just now joining the stream, hit the subscribe button. We are trying to hit 100K. We're so close to it too, man. We are so close to 100K. We're almost up to 99 right now. So again, anything helps. If you could just hit the subscribe button. Just help a starving trader. You know, where's Sarah McLachlan at? In the arms of the angel. Subscribe right now. SPY up to 411.50s. Meta just broke highs of the day up to 176 right now. 176. Fourth quarter family daily active users up to 2.96 billion versus 2.95 billion expectations. So the higher daily active users than expected. They had about 40.74 billion in cash equivalent, and marketable securities as of December 31st. Headcount was about 86.482 thousand, a little bit almost 87,000. Long-term debt was about almost 10 billion as of December 31st. The reported headcount includes substantial majority of 11,000 employees impacted by layoff. Fourth quarter DAU was up at 2 billion versus estimate of 1.9 billion. Hey, thank you, Kay. What's up, Don? Hey, I'm good, bro. Hope you're doing good, man. What's your thoughts on Amazon? I think Amazon's a little, like, Amazon PE ratio is a little high. So, you know, That's the only thing stopping me from buying Amazon. I mean, I prefer to buy on big pullbacks, and we've been on like a kind of a bull run the last couple weeks anyway. So I haven't really been buying up swing trades. I've been waiting for the Fed meeting to end. So we still got time, but yeah, I haven't been buying up stuff like I normally do, just because again, we just haven't really got some big bear action. I'm kind of a bottom feeder when it comes to buying up stocks, right? I like to see big weakness. That's when I buy. I bought Snapchat I don't know if it was this morning or yesterday, but I bought Snap, and we're up nicely in Snap. We're up about 50 cents a share, give or take. Hey, thank you, Steve. So now that we have this data out the way, we're going to end this poll. And we're going to do another poll. And Meta breaking highs. Bullish or bearish on Meta's earnings call? Vote on this poll, bull or bear. Let's look at our YouTube poll. Or a Twitter poll. We got a Twitter poll as well. So we got about 63 votes on Twitter. About 52% think call or put options. I mean, about 48% think call options. So mostly bears on Twitter. Meta platform expects estimated $1 billion in restructuring charges in 23 related to consolidating office facilities footprint. They had previously seen $2 billion in restructuring charges in 23 related to consolidating offices. But yeah, they just broke highs, got up to 177. Hey, thank you, Bernardo. I appreciate you, brother. Thank you, man. Shout out to Bernardo with the $5 donation, man. Thank you so much. I appreciate it. Yeah, Meta just broke highs, got over 180s right now for Meta, guys. Over 180s here. All right, guys, so we got the full conference call. So yeah, we got the full Meta conference call pretty soon. Y'all be ready. That's in about 40 minutes. Meta all the way up to 181. SPY breaking highs again here. Up to 412, at least pre-market highs, not or after hours highs. I mean, not the actual highs of the day. The high of the day are all the way up at 413s. Just tuning in. Seems like an overreaction to the high side. Am I missing something? No, not necessarily. I mean, Meta had good guidance. So there's two big factors when it comes to earnings, right? So you have EPS and revenue, which are the basic metrics that people look at for earnings, right? EPS is profitability, so it's a gauge on how profitable the company is. Revenue is how much money the company's bringing in. All very relevant to company health, right? But then and again, when you're looking at data, it's all relative to expectations. The example I always use is like a company can lose 100 million, but if they thought they were going to lose 200 million, they'll still probably go up. Now, with that said, one of the more important metrics outside of those two are guidance. Some consider guidance to be more important because guidance are actually future projections, right? So like EPS and revenue are historical numbers and metrics. Guidance is future projections. And so, if you want to see whether you should buy a stock, a lot of people look at guidance numbers, and Meta had better than expected guidance for the first quarter. So basically, Meta thinks that they're going to do a little bit better than analysts expected in the first quarter of 2023. And again, I'm not saying they will for sure, but people are using that as a very optimistic sign, as they should. And Meta's pushing up right now to 181s, 182s. To be honest, it looks like a little bit of an overreaction to me personally, to be honest. But it's not, it's not super crazy in my opinion. I mean, again, they had good guidance, good revenue, missed on EPS. So they had mixed results on the positive side, and then their guidance was very positive. So that's the argument for why they're moving up as much as they are. But again, you never know. Maybe they don't hold their value. Again, we have Google, Amazon, and Apple earnings tomorrow, which will be big. We also have jobless claims numbers, which will be relevant for the market and economy tomorrow as well. Yeah, all good, Jason. No worries, man. And again, subscribe, guys. Listen, we do this for free. I don't even claim to be an expert or a good trader. I don't sell a course myself. I don't want to be any of that stuff. I'm just putting everything out there for free. We just want to be a resource and community where traders don't have to spend thousands on a course. We just kind of give them everything for free. We don't claim to be an expert. I don't want the pressure. We trade live every day. We cover all the big data, all the big earnings. We stream Jerome Powell press conferences, jobless sales, retail sales, all that good stuff we cover. And so if you haven't already, hit the subscribe button. All right, SPY testing that 412 after hours high here. Meta's still pushing up. What is your trading style? Yeah, Philly, we do that. We like I said, we trade live every weekday morning. So we don't just cover data. Like we stream live and trade the opening bell every weekday morning. I'm a scalper and a trend trader, volume weighted average price VWAP trader. I've been doing a little bit better with my swing trades though. Like my swing trades are accurate for the most part. Again, Disney, we bought at like 85s to 90 and we sold at mid 90s. Google, we did the same. And so my swing trades have been on point, and my strategy basically revolves around looking for discounts and with like big emotional overreactions and on the downside. Like Amazon last earnings report dropped like 20% on mixed data. It dropped 20%. And so we bought the dip and sold the next day for a big percentage gain. It's bounced back like 10 or 15% within a few days. And so we will look for discrepancies like that to capitalize on, and we just wait for big emotional drops and buy them up and just kind of sit. But again, a big part of that system is like I'll hold it long term if I need to. If they're blue chip companies, and I only do it with blue chips, except for maybe Snapchat and a few other ones, but I certainly don't recommend you guys try that. But if I believe in the company long term, I don't mind sitting on it for months or longer if I need to. But most of the time, I make money within a couple months. They're back within a few weeks, really, usually. And I just take profit quick anytime I'm up a big percentage and kind of cut it and move on to the next one. And you're going to get moves like that in every stock a few times a year at least. So you just gotta wait. A lot of the time, they'll happen during earnings or they'll happen during Fed rate hike decisions and stuff like that. No, trying to predict the top Reese is just risky in my opinion. Hey, good luck, D. Again, Meta did better than expected in revenue, worse than expected on EPS, higher than expected, better than expected for guidance. So we will put all of this stuff in one so y'all can see. We're going to put a scroller at the bottom of the screen that shows you the guidance numbers. So bear with me. We're going to put this up on the screen. All right, so here is the full guidance numbers. Here's the full report basically right here, guys. So this is the full report right here. Basically everything they did. Testing the top of the range. Snapchat's still pumping up too. Snap is a joke. Could never buy that. I mean, but I think that's short-sighted thinking, Max. I don't care about these actual, like, I don't care about these companies. Like, that's what you have to understand. Like, I don't care about any of these companies. I don't, like, again, the biggest mistakes I see people making in investing and trading, in my opinion, are like people either fanboy companies or they absolutely hate them, right? Like, I'm not on either side of that. Like, I'm not super biased in either side. I look for cheap value, right? I put it into perspective. Right now in Snapchat, I'm up 60 cents a share, which boils down to, I think, what is that, like 5%? In a day, you know what I mean? So I think I just look for discrepancies. Again, Snapchat's got hundreds of millions of daily active users. Snapchat Plus made 2 million, right? They had their first positive EPS in 4 or 5 years, right? And then they dropped freaking 15% yesterday at the close. And so again, I mean, like I said, we can hate Snapchat, but I think there's objective value when it drops like that on a short-term time frame. Same thing with Disney. People hate Disney. They say, "Oh, Disney this, Disney that." Bro, I don't care about any of that. Disney is a money-making machine. They own Star Wars. They own Marvel. Disney World makes $20 million a year. You know, more Star Wars movies are going to come out in the next few years. All of that's going to influence the stock. They own ESPN. You know, so like when Disney drops down to the $80 level, there's no real argument on not buying that, in my opinion. And again, I do this over and over again. And so I don't hate stocks. I don't love stocks. I just look for objective value. You know, I look for discrepancies in price and objective value. Hey, thank you, Mert. I appreciate you, man. Thank you, sir. All right, guys, we still have about 30 minutes before the actual earnings call starts. About 30 minutes. Somebody said, but Kramer said to buy the dip. Hey. Yeah, maybe Meta drops tomorrow. I don't know. Like I said, really no idea. SPY starting to bounce back up. Meta still looks pretty strong today, though. Honestly, Kramer Curse has been surprisingly accurate, though. It really has, bro. That thing has been surprisingly accurate. Are y'all buying the Cybertruck, man? All right, Meta moving closer to 181s right now, 181s. Hey, thank you, Mark. I appreciate you, man. Hey, thank you, Jobert. People say it's ugly. I mean, I get it. To be honest, it looks like a moon rover. The problem is, like, I've heard from people that own Teslas that they don't like them, that they feel cheaply made. You know, and again, I don't own a Tesla. Let me know if you guys own a Tesla. Let me know if that's true or not. Again, I don't know. Now, why did Microsoft bounce up so much? Probably just sympathy from everything else. You know, Microsoft moved up because it's the second largest percentage of the S&P 500, and the Jerome Powell press conference and rate hike decision was pretty optimistic. I mean, people are trying to say the press conference was bearish because Jerome Powell said he doesn't plan to pivot this year for now. But everything else he said was surprisingly positive, I think. And again, it looks like most people thought that. And so, you know, any big cap stock like Microsoft, Apple, Disney, Google, Amazon, they're going to follow the market, and the market's going to follow them. So, you know, that's why Microsoft is up, is because, you know, the rate hike decision was interpreted as positive. Yeah, Lucid's dope, but I think they're gonna have a problem in terms of succeeding in the automobile industry. You know, all of them. I think they're all gonna struggle succeeding in the automobile industry. Not Tesla, but I think most other EVs are gonna struggle because I think the big boys have an innate advantage. You know, I think Honda, Toyota, Ford. You know, I think they're all gonna. I think if you're an up-and-coming EV brand, like, I don't know, the one I always hear is Mullen. Mullen's terrible. Good technology, but there's just almost no chance it succeeds as a standalone automobile company. Nobody's going to buy it. Outside of the stock market, nobody's heard of it. You know, so like Mullen, Rivian, Lucid. Lucids are really cool. I think Lucids maybe have carved out a niche, maybe. So I like Lucid more than most of the other ones. But I think they're risky bets, personally. But again, maybe I'm wrong, and I think it's high risk, high reward. I think they're risky, but if you're right, you know, you're set to win big on those. But my eyes hurt. Yeah, honestly, man, my eyes freaking hurt, bro. Like, my eyes hurt. The only thing I could think of is that I've been on prednisone for like a week, like prednisone eye drops. Like, I've been on prednisone eye drops for like a week, and my eyes freaking hurt, bro. And so I'm hoping it's just kind of like a bounce back and inflammation from stopping the prednisone. I haven't taken it today, but bro, my eyes freaking hurt, man. I've been to the ophthalmologist. I've been to the optometrist. Man, they all say that it's nothing, that they don't see anything on the scans. So I really have no idea why my eyes hurt so bad, bro. But they hurt, dude. Like, I got the prednisone eye drops here. And, like, I could take prednisone, and I know they would make my eyes feel better, but I have to get off of them eventually. I can't stay on prednisone eye drops forever. So it's like, I don't know what to do. Ugh. Yeah, I'm going to turn the lights on here, man. But, man. But, yeah, my eyes freaking hurt, man. I'm going to turn the night lights off on the night lights on the monitor, too. Cool. I'm turning on high strength right now, but, man. Yeah, I'm not judging about the glaucoma help, Flippa. I'm not morally against it, but... Yeah, I got him, Dave. That's exactly what I got. I got the artificial tears, the no preservative artificial tears already. Hey, thank you, Don. I appreciate you, brother. Thank you, man. Bro, I work out every day, Jose. Not every day. I work out like 3 times a week, bro. It's not a working out problem, bro. I work out like 3 times a week, man. What it really is just my eyes have had a viral infection, they think, over the last couple weeks. Yeah, I took Advil earlier, though, man. Missed the report snow. So basically, Meta had worse than expected EPS, better than expected revenue, higher than expected guidance. So good guidance, good revenue, bad EPS. They ripped up from it. They're up to 180s right now, basically. No, so they think it's viral. If they gave me prednisone eye drops, you know. So they gave me prednisone eye drops. They thought it was viral, but I went to it. That was my actual optometrist. I went to an ophthalmologist, and they did that, like, the light scan, and they looked in my eyes, and they did all those scans, and they didn't see anything, bro. He was basically like, "Yo, your eyes are fine." But man, yeah, I've got blue blocking glasses. That's what I'm wearing right now. Is blue blocking glasses, but oof. Yeah, they didn't give me antibiotics, man. Prednisone's not an antibiotic. Prednisone is actually a steroidal eye drop. I got the yellow eyes, like my daddy eyes, with the look upon my face that say homicide. Can take a ride to Baton Rouge. Sorry, old Lil Boosie song. But my eyes freaking hurt, bro. Ugh. My eyes hurt. Yeah, all good, man. All good, man. It's all good. All right, guys. So Meta's right under 180s. We got the SPY at 411.50s. Sauna? I wish I had a sauna, bro. I wish I had a sauna, man. I've been doing that cold water therapy, though, every day. And honestly, that tough stuff takes some willpower. All right, we got about 20 minutes before the numbers. But yeah, so right now, we got about 20 minutes before the data comes out. Now, the earnings call is about 20 minutes, so we're just going to stick around here. Again, I'm trying to look the other way, but... Astigma. Yeah, I got a astigmatism, but Honestly, I was scheduled to go to the doctor to get contact lenses because I'm nearsighted, and the glasses that I wear just hurt my eyes really bad. And so I was scheduled to go to the eye doctor for astigmatism and to get fitted for contacts for nearsightedness, but they canceled it. It was supposed to be Monday, but they canceled it, and now it's not until like later on, like in a couple weeks. I'll probably try to get in somewhere else, but yeah, I don't have Esric here. Yeah, maybe it's too much screen time. Yeah, man, Steven, I've been here since right now it's about 4 p.m. I've been here for 5 hours now. We did the rate hike decision. Now we've got the Meta earnings. So I just got to stretch, man, and kind of try to relax a little bit, man. All right, so again, market's been looking good, man. Market's been pumping up. I mean, enjoy the Meta earnings call, because in about 20 minutes, I'm just gonna be able to put the earnings call up and just chill. And again, hit that subscribe button, guys. We'll be back tomorrow. Meta earnings. We're gonna stream the full Meta earnings call, which again scheduled to come out in about 20 minutes. And then tomorrow we've got the need a girlfriend. Bro, I'm married. I got 2 kids. I got a 13-year-old and an 8-year-old, and I'm married. Here's my wife right here. She's actually got her own emoji. Yeah. But yeah. No, not high blood pressure, not diabetes. Yeah. Could be high blood pressure, I guess. Let me try that here. I'll be right back. I don't know. Maybe it's high blood pressure. So I just took an aspirin to see if that helps. But I give myself blood pressure readings, and it says my blood pressure is never super high. Like, it's never been over like 135, over like 85 or 90, over like 85 or 90. So it's never been super, super high. But I'm gonna try taking an aspirin and see if that lowers my blood pressure. How, you got a 13-year-old? Hey, I'll take looking young. I'm in my 30s, though. I hated looking young all my life. Now that I'm over 30, I'm okay with it. I'm starting to get some wrinkles, though. I got those forehead wrinkles and those crow's feet on my eyes. Yeah, maybe from stock market, maybe. Yeah, I mean, that's high for sure, but usually it's not that high. Like, most of the time my blood pressure is like, it's like 120 over over like 80 or over 75. So it's generally not super high. Botox? Hey, maybe. I'm not getting Botox yet. Never gotten it before. I'm not going to get it now. Because if I start Botox now, bro, by the time I'm like 40, bro, I'm going to be looking crazy. And I don't want to look crazy, you know? And so I'm just going to wait. Yeah, hey. Meta back over 180s here. SPY at 411.60s. That music sounds like an old school Secret of Mana RPG style game. I'm gonna bust my ocarina out and start playing that thing. You know, I don't actually have an ocarina, but I don't know how much Botox is, man. Hey, what's up, Attack? Hey, yeah, we're still here, man. It's a long day. We usually don't stream this much, man. So, like, most of the time we're not streaming this much. But today we got a lot of stuff happening, and I'm really trying to push for the channel to hit 100K. We're at almost 99,000 now, so we're getting close. I'd really love the channel to hit 100K sometime this week, and we're gonna get pretty close to it. But yeah, the earnings call starts in about 15 minutes. I don't mind chilling with everybody. It's fun to hang out with everybody and talk about stocks and stuff. But I'm gonna enjoy a nice little break after this one. But then tomorrow we got a full day on our plate too. We already got tomorrow we got jobless claims numbers. We got the Bank of England rate decision. We've got Apple, Google, Amazon earnings in the evening, and then Friday we've got unemployment and non-farm payroll data. So it's a busy week. It's the biggest week of stock market movement that we've had in a while. I lost a couple hundred on micro E-mini trying to predict the top, man. I'm sorry to hear that, man. My guy pulls out mesobial folds. What is that? I gotta look this up. You're talking about this right here. Yeah, I don't know. Like I said, I've never been super worried about wrinkles or anything like that. I've always looked too young in my life. Like, I hated looking young. Everybody wants to look young when they're old, but when you're 15 or 16 and you look like you're 12, everybody hates it. It's not fun. You know, when I was 18, I looked like a 15-year-old, you know. Honestly, though, it all balances out. Like, if you're young, if you're 18 or 19 and you can grow a beard and like a full beard and you like, you know, usually you're going to look older when you're 30 or 40. And vice versa, you know, and so I'm okay with looking young now, but I hated it when I was young. Meta's pushing up here, getting ready to maybe test highs here. It's at 182s right now, 182s. Let's see if it can break. No, they didn't even really say much about reels. It's old Ric Flair woo. Hey. Meta had good guidance, though. I mean, that's why they're going up right now. The guidance was better than expected. And again, EPS was negative, or worse than expected, I should say. Revenue was higher than expected. So revenue was higher than expected. Guidance was higher than expected. EPS, which is profitability, was a little bit lower than expected, right? So it was a mixed report, but on the positive side. Guidance is one of the more important metrics there. So EPS and revenue are historical metrics. Guidance are future projections. And so with future projections being higher than expected, that is why Meta ripped up like it did. And they're pumping up to almost 182s right now, getting ready to test the highs, it looks like. Yeah, for sure, Chris. Meta's still cheap. I don't know, man. I mean, I think if we're looking at the PE, what's the PE ratio of Meta? Meta PE ratio is 14. So Meta's objectively cheap regarding PE ratios. Under 15 for Meta PE. So that's very low. But again, Meta, a lot of people look at Facebook and they say, oh, Meta's on its way out. But Meta owns Instagram. The problem with Meta, the reason it got so cheap here is because, again, Mark Zuckerberg, announced that they lost like 10 billion to the metaverse in 2021. And so they had a pretty rough year after announcing all that stuff in 2022. But the PE ratio, even still at these current levels, is very cheap. But again, I don't know if PE is the most relevant for Meta, because I think the argument is they're fading because of lack of relevancy in social media from Facebook. But, we'll see. 10 minutes. Yeah, $40 billion buyback program, better than expected guidance, higher than expected revenue, worse than expected EPS. They're pretty positive. Hey, thank you so much, Kay. Thank you so much, Brian. Bryant, thank you so much, man. So my $3 160 call options, maybe worth something tomorrow. Yeah, man, you're going to be in the money for sure. Congrats. Good trade. Would that PE be current or relative to or just on prior to today's numbers here? Let me look. I can look up the PE ratio myself. Let me see what it is. So, all right. So let's calculate Meta's PE. All right. So Meta last four are 272 plus 246 plus 164 plus 176 is what they showed today. All right, so 858. 858 is what their the trailing 12-month EPS is. 858 for Meta. Now we take their price, which we'll just call 180. And you get a PE ratio of about 21 right now at these current levels, about 21. So yeah, the PE ratio is obviously not as good right now. It's about 21 PE ratio currently, which is still not bad considering like Amazon's got a PE ratio of like over 60 or 70. Tesla's over 30. So it's not as good for sure. It's definitely not as good of a 14 or 15 PE, but it's still not bad. Ideally for PE, you want like under 25, under 30. Some say under 20. So it's definitely, I wouldn't call it overpriced right now in terms of PE, but it's not as good, currently. So. Yeah, the 40 billion buyback definitely helps Meta right now for sure. Definitely helping the price currently. Yeah, Amazon PE is 98 right now. Yeah, for sure. Super high. And Amazon's still moving up. All right, guys, we're at 98.7 thousand subscribers. We only need 1.3 thousand subs left to hit 100,000 and give me my plaque. I want my plaque. Got my sub today. Hey, thank you, Dean. I just subbed. Great stream on earnings. Hey, thank you, MH. Yeah, I mean, like I said, guys, I don't claim to be an expert or anything, but I do have some experience here. Like, I've been trading for years, every day. You know, I trade for years. I've run this channel for 6 years. You know, we're almost to 100,000. But again, like, I don't sell a course. Like, I don't do that. Like, I just try to put everything out there for free. I don't want to. Like I said, I think there's enough day trading gurus out there selling courses on publicly available content for me. So I'd rather just be like a free place. Like, I make money. You better believe we make money here. You know, we're not sitting here for 6 hours hurting my eyes for nothing out of the kindness of my heart. Nobody is. But, you know, we try to do it right. We always tell people we're biased in terms of our sponsors and stuff like that. We do have sponsors. Speaking of sponsors, check out Top Step. Top Step is a funded account program for futures. And so it's like a lot of traders, when they get started, day trading especially, they lose money. I lost thousands of dollars. If I would have known about one of these funded account programs in futures, number one, there's no PDT in futures. If you look at the SPY on the left and the E-mini on the right, same price action, but you can day trade that right side with no PDT restriction in futures. And Top Step is kind of a test of futures, right? They give you a demo. If you can hit the target on their demo while following their rules, they fund you in futures between 50 to 150K with a 90% split. They've been around for over a decade. They fund thousands of traders a year, pay out millions of dollars in actual withdrawals a year. And if you want to check them out, here is the link. But again, they are a sponsor of mine. I'm certainly biased in their favor because they pay me money. All right, guys, we have about 5 minutes before the actual earnings call starts. About 5 minutes. Honestly, I'm really looking forward to giving my eyes a break here. Hey, thank you, Bri. Hey, it does help, man. Thank you. We are getting ready for the actual earnings call. There we go. Yeah, we're sitting on hold for the... We're sitting on hold, waiting for the earnings call to start. It starts in about 4 minutes. Sound check. Y'all can hear the music right now, right? So y'all can hear the music, correct? I just want to make sure because, you know, we're going to close the music down and start the earnings call soon over the next 5 minutes. So I just want to make sure y'all can actually hear this. Yeah, Michael Burry deleting his Twitter. All right, so after tweeting to sell at the bottom and then saying you have no idea how short I am, prior to that, Burry has deleted his Twitter account again, man. Again, like I said, I argue with bears every day. They tell me the market's going to crash. I tell them we don't know what the market's going to do, and, you know, they get mad, and maybe they're right, but Burry has deleted his Twitter account after basically posting a cryptic tweet that said, sell, ahead of the Fed rate hike decision, and then the Fed meeting popped the market up big. So again, everybody wants to be Michael Burry, but he's been wildly wrong lately. And maybe he's right long term, but bro, I lost 8K in ETH mining. You think I can cover it trading? I mean, you could, but will you is a different story. I mean, you have to understand, if you're day trading, a large majority of people lose money long term. You know, if you're not profitable, you know, don't take that risk, in my opinion. I think it's a huge risk, and you'll probably lose money if you try day trading it. I think if you're going to day trade, try a funded account program to test yourself, because you'll have some pressure, but like you're not risking thousands, and it'll really genuinely test your skill before you put up big money. You know, most traders, like in the very beginning, they just put up too much money and they gamble and then they lose. You know, that's kind of how it goes most of the time. So just if you're getting started trading, just trade small, man. You know, the easiest money to make is Warren Buffett value investing, buying blue chip healthy companies, diversifying into low PE blue chip healthy companies, and sitting on those for years. If you do it right and diversify well enough, you're almost guaranteed to make money. And a lot of people miss out on the biggest edge of the market, which is that long term. You know, stocks generally go up. S&P 500 gives you on average 8 to 12% a year. Meta's getting ready to test highs here. Yeah, we got a Discord. All right, guys, earnings call is getting ready to start right now in less than a minute. We are waiting on hold for it to start. All right, guys. Getting ready here. We got probably about 10 or 15 seconds before it starts. I'm going to mute the music, and we are going to get ready to start the earnings stream here. Give me 1 second to make sure we got it up here. Let me find it. Okay, here it is. Call's about to start. All right, they've got some terrible hold music that we are waiting for it to start now. I got terrible hold music here. Waiting for this to start now. Still waiting with this terrible hold music. Should be starting any time now, guys. So patiently bear with me. We're gonna get ready to. We're on hold, waiting for it to start. It looks like they're a little bit late in starting theirs, which is okay. I'm gonna refresh this to make sure. Yep, still on terrible hold music. I'll lower this. This make my eyes hurt more. Just listening to this. It's too fast paced for me. I should be starting any time now. All right, here we go. Sound check.
Good afternoon. My name is Dave, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta fourth quarter and full year 2022 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press the 1, then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ms. Deborah Crawford, Meta's Vice President of Investor Relations, you may begin.
Thank you. Good afternoon, and welcome to Meta Platforms' fourth quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Javier Olivan, COO, is also on the call and will join Mark and Susan for the Q&A portion. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone, and thanks for joining us today. 2022 was a challenging year, but I think we ended it having made good progress on our main priorities and setting ourselves up to deliver better results this year, as long as we keep pushing on efficiency. And I said last quarter that I thought our product trends look better than most of the commentary out there suggests, and I think that's even more the case now. We reach more than 3.7 billion people monthly across our family of apps. On Facebook, we now reach 2 billion daily actives and almost 3 billion monthly. The number of people daily using Facebook, Instagram, and WhatsApp is the highest it's ever been. Now, before getting into our product priorities, I want to discuss my management theme for 2023, which is the year of efficiency. We closed last year with some difficult layoffs and restructuring some teams. And when we did this, I said clearly that this was the beginning of our focus on efficiency and not the end. And since then, we've taken some additional steps, like working with our infrastructure team on how to deliver our roadmap while spending less on CapEx. Next, we're working on flattening our org structure and removing some layers of middle management to make decisions faster, as well as deploying AI tools to help our engineers be more productive. As part of this, we're going to be more proactive about cutting projects that aren't performing or may no longer be as crucial. But my main focus is on increasing the efficiency of how we execute our top priorities. So I think that there's going to be some more that we can do to improve our productivity, speed, and cost structure. And by working on this over a sustained period, I think we'll both build a stronger technology company and become more profitable. I'm very focused on doing this in a way that helps us build better products. And because of that, even if our business outperforms our goals, this will stay our management theme for the year, since I think it's going to make us a better company. Now, at the same time, I'm also focused on delivering better financial results than what we've reported recently, and on meeting the expectation that I outlined last year of delivering compounding earnings growth even while investing aggressively in future technology. Now, next, I want to give some updates on our priority areas. Our priorities haven't changed since last year. The two major technological waves driving our roadmap are AI today and over the longer term, the metaverse. So first, let's talk about our AI discovery engine. Facebook and Instagram are shifting from being organized solely around people and accounts you follow to increasingly showing more relevant content recommended by our AI systems. And this covers every content format, which is something that makes our services unique. But we're especially focused on short-form video since Reels is growing so quickly. And I'm really proud of our progress here. Reels plays across Facebook and Instagram have more than doubled over the last year, while the social component of people resharing Reels has grown even faster and has more than doubled on both apps in just the last 6 months. The next bottleneck that we're focused on to continue growing Reels is improving monetization efficiency, or the revenue that's generated per minute of Reels watched. Currently, the monetization efficiency of Reels is much less than feed. So the more that Reels grows, even though it adds engagement to the system overall, it takes some time away from feed and we actually lose money. But people want to see more Reels, though. So the key to unlocking that is improving our monetization efficiency so that way we can show more Reels without losing increasing amounts of money. We're making progress here, and our monetization efficiency on Facebook has doubled in the past 6 months. In terms of the revenue headwind, we're still on track to be roughly neutral by the end of this year or maybe early next year. And then after that, we should be able to profitably grow Reels while keeping up with the demand that we see. In our broader ads business, we're continuing to invest in AI, and we're seeing our efforts pay off here. In the last quarter, advertisers saw over 20% more conversions than in the year before. And combined with a declining cost per acquisition, this has resulted in higher returns on ad spend. We continue to be excited about the monetization opportunity with business messaging too. Facebook and Instagram are the first two pillars of our business, and in the next few years, we hope to bring messaging online as the next pillar. One way of doing this is click-to-message ads, which is now at a $10 billion run rate. And paid messaging is the other piece of this. We're earlier here, but we continue to onboard more businesses to the WhatsApp business platform where they can answer customer questions, send updates, and sell directly in chat. So for example, Air France started using WhatsApp to share boarding passes and other flight information in 22 countries and 4 languages. And businesses often tell us that more people open their messages and they get better results on WhatsApp than other channels. AI, it's the foundation of our discovery engine and our ads business. And we also think that it's going to enable many new products and additional transformations in our apps. Generative AI is an extremely exciting new area with so many different applications. And one of my goals for Meta is to build on our research to become a leader in generative AI in addition to our leading work in recommendation AI. So the last area that I want to talk about is the metaverse. We shipped Quest Pro at the end of last year. I'm really proud of it. It's the first mainstream mixed reality device. And we are setting the standard for the industry with our Meta reality system. Now, as always, the reason why we're focused on building these platforms is to deliver better social experiences than what's possible today on phones. And the value of MR is that you can experience the immersion and presence of VR while still being grounded in the physical world around you. We're already seeing developers build out some impressive new experiences like Nanome for 3D modeling, molecules and drug development, Archeo for architects and designers to create interiors, and of course, a lot of great games. The MR ecosystem is relatively new, but I think it's going to grow a lot over the next few years. Later this year, we're going to launch our next generation consumer headset, which will feature Meta reality as well. And I expect that this is going to establish this technology as the baseline for all headsets going forward, and eventually, of course, for AR glasses as well. Beyond MR, the broader VR ecosystem continues growing. There are now over 200 apps on our VR devices that have made more than $1 million in revenue. We're also continuing to make progress with avatars. We just launched avatars on WhatsApp last quarter, and more than 100 million people have already created avatars in the app. And of those, about 1 in 5 are using their avatar as their WhatsApp profile photo. And I thought that was an interesting example of how the family of apps and metaverse visions come together. Because even though most of our Reality Labs investment is going towards future computing platforms, glasses, headsets, and the software to run them, as the technology develops, most people are going to experience the metaverse for the first time on phones and then start building up their digital identities across our apps. All right, so those are the areas we're focused on: AI, including our discovery engine, ads, business messaging, and increasingly generative AI, and the future platforms for the metaverse. And from an operating perspective, we are focused on efficiency and continuing to streamline the company so we can execute these priorities as well as possible and build a better company while improving our business performance. And as always, I'm grateful to our teams for your work on all of these important areas, and to all of you for being on this journey with us. And now over to Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q4 total revenue was $32.2 billion, down 4% or up 2% year over year on a constant currency basis. Had foreign exchange rates remained constant with Q4 of last year, total revenue would have been approximately $2 billion higher. Q4 total expenses were $25.8 billion, up 22% compared to last year. In terms of the specific line items, cost of revenue increased 31%, driven mostly by a write-down of certain data center assets, as well as growth in infrastructure-related costs. R&D increased 39%, marketing and sales increased 4%, and G&A decreased 7%. Operating lease impairments and employee-related costs were the largest contributors to growth for all three expense lines. However, growth in marketing and sales was partially offset by lower marketing spend, and growth in G&A was more than fully offset by a decrease in legal-related expenses. We ended the fourth quarter with over 86,400 employees, which includes a substantial majority of the approximately 11,000 employees impacted by our previously announced layoff, who remained on payroll as of December 31st due to applicable legal requirements. We expect the vast majority of the impacted employees will no longer be captured in our reported headcount figures by the end of the first quarter of 2023. Fourth quarter operating income was $6.4 billion, representing a 20% operating margin. Our tax rate for the quarter was 24%. Net income was $4.7 billion, or $1.76 per share. Capital expenditures, including principal payments on finance leases, were $9.2 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $5.3 billion, and we ended the year with $40.7 billion in cash and marketable securities. In the fourth quarter, we repurchased $6.9 billion of our Class A common stock, bringing our total share repurchases for the full year to $27.9 billion. We had $10.9 billion remaining on our prior authorization as of December 31st, and today we announced a $40 billion increase in our stock repurchase authorization. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 2.96 billion people used at least one of our Family of Apps on a daily basis in December, and that approximately 3.74 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. We reached 2 billion Facebook daily active users for the first time in December, up 4% or 71 million compared to last year. DAUs represented approximately 67% of the 2.96 billion monthly active users in December. MAUs grew by 51 million or 2% compared to last year. Q4 total Family of Apps revenue was $31.4 billion, down 4% year over year. Q4 Family of Apps ad revenue was $31.3 billion, down 4%, but up 2% on a constant currency basis. Consistent with our expectations, Q4 revenue remained under pressure from weak advertising demand, which we believe continues to be impacted by the uncertain and volatile macroeconomic landscape. The financial services and technology verticals were the largest negative contributors to the year-over-year decline in Q4, but both have relatively smaller shares of our revenue. Growth remained negative in our largest verticals, online commerce and CPG, though the pace of year-over-year decline in online commerce has slowed compared to last quarter. The largest positive contributors to year-over-year growth in Q4 were the travel and healthcare verticals, though both are relatively smaller verticals in absolute share. Foreign currency remained a significant headwind to advertising revenue growth in all international regions. On a user geography basis, ad revenue growth was strongest in rest of world at 5%. North America was flat, while Asia Pacific and Europe declined 3% and 16% respectively. In Q4, the total number of ad impressions served across our services increased 23%, and the average price per ad decreased 22%. Impression growth was primarily driven by the Asia Pacific and rest of world regions. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, lower advertiser demand, and foreign currency depreciation. While overall pricing remains under pressure from these factors, we have continued to make improvements to our ads targeting and measurement that we believe are driving more conversions and better returns for advertisers. Family of Apps other revenue was $184 million in Q4, up 19%, with strong business messaging revenue growth from our WhatsApp business platform, partially offset by a decline in other line items. We continue to direct the majority of our investments towards the development and operation of our family of apps. In Q4, family of apps expenses were $20.8 billion, representing 81% of our overall expenses. Family of apps expenses were up 23% due primarily to restructuring related expenses and growth in infrastructure related costs. Family of apps operating income was $10.7 billion, representing a 34% operating margin. Within our Reality Labs segment, Q4 revenue was $727 million, down 17% due to lower Quest 2 sales. Reality Labs expenses were $5 billion, up 20% due primarily to employee-related costs and restructuring-related expenses. Reality Labs operating loss was $4.3 billion. Before turning to the outlook, I'd like to discuss our work to grow profitability by scaling monetization and improving our operational efficiency. There are two primary levers to increasing monetization: growing supply and growing demand. Growing ad supply gives businesses more opportunities to get in front of people, and we are focused on enabling that in a couple of ways. First and foremost, we remain focused on building engaging experiences for the people who use our apps. We are coming into 2023 with a strong foundation as Reels continues to scale, and we're seeing in-feed recommendations contribute to engagement as we help people discover new content in their feeds. We will continue to invest in making these experiences best in class. The other side of growing supply comes from more effectively monetizing the surfaces within our apps, including those that have a lower level of ads today. In the nearer term, ramping Reels monetization remains a primary focus. Over the longer term, we see opportunities to continue improving Facebook and Instagram monetization while also scaling revenue contributions from our messaging platforms. Growing advertiser demand is the other focus, and a big effort here is around continuing to drive advertiser performance. While we're still contending with the broader macro uncertainty and signals landscape weighing on advertiser demand in the near term, we're making good progress on our roadmap and are already seeing improvements to ad performance and measurement from the investments we've made. We see opportunities for continued gains in the near and medium term, with our AI investments powering a lot of this work as we continue to improve ads ranking and enable increased automation for advertisers to make it easier for them to run campaigns and use our systems to optimize their performance. Another opportunity we have is to further scale on-site conversions through products like click-to-message, lead ads, and shop ads. Click-to-message ads continue to grow quickly, and we believe they're bringing incremental demand onto our platform, with over half of click-to-message advertisers exclusively using click-to-messaging ads on our platform. We see further opportunity as we continue to scale click-to-WhatsApp ads and are investing in growing newer formats like shop ads. Over the long term, we're investing heavily in AI to develop and deploy privacy-enhancing technologies and continue building new tools that will make it easier for advertisers to create and deliver more relevant and engaging ads. Moving now to our efficiency work. We took significant actions in 2022 to operate more efficiently. In Q4, we made the difficult decision to lay off employees while deprioritizing certain projects and curtailing non-headcount related expenses. We've applied the same scrutiny to our physical assets. We identified opportunities to consolidate our office facilities, and we have streamlined our future data centers to a new architecture, which we believe will be more cost efficient and more flexible, that provides us optionality to support both AI and non-AI workloads. In Q4, we recorded $4.2 billion of total restructuring costs in connection with all of these efforts, and expect there to be some additional costs in 2023 in areas like office facilities impairments as we continue this work. As Mark has said, these actions are just the beginning of our efficiency efforts, and we remain keenly focused on this in 2023. We are working across the company to deprioritize lower ROI work, move faster, increase productivity, and reduce costs across the business. As part of this, we are carefully scrutinizing our hiring needs, actively reevaluating projects, and reducing management layers. I'm confident that our company-wide focus on efficiency will position us to be an even more productive organization going forward. Turning now to the revenue outlook. We expect first quarter 2023 total revenue to be in the range of $26 to $28.5 billion. Our guidance assumes foreign currency will be an approximately 2% headwind to year-over-year total revenue growth in the first quarter, based on current exchange rates. Turning now to the expense outlook. We anticipate our full year 2023 total expenses will be in the range of $89 to $95 billion, lowered from our prior outlook of $94 to $100 billion due to slower anticipated growth in payroll expenses and cost of revenue. We now expect to record an estimated $1 billion in restructuring charges in 2023 related to consolidating our office facilities footprint. This is down from our prior estimate of $2 billion, as we recorded a portion of the charges in the fourth quarter of 2022. We may incur additional restructuring charges as we progress further in our efficiency efforts. Turning now to the CapEx outlook for 2023. We expect capital expenditures to be in the range of $30 to $33 billion, lowered from our prior estimate of $34 to $37 billion. The reduced outlook reflects our updated plans for lower data center construction spend in 2023 as we shift to a new data center architecture that is more cost efficient and can support both AI and non-AI workloads. Substantially all of our capital expenditures continue to support the family of apps. On to tax. Absent any changes to U.S. tax law, we expect our full year 2023 tax rate percentage to be in the low 20s. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, 2022 was a challenging but pivotal year for our business. We made important progress on our priorities and have taken significant steps to improve our efficiency and productivity. We are set up well to build on this work in 2023 as we continue investing for future growth while remaining focused on delivering strong financial performance. With that, Dave, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch tone phone. Please pick up your handset before asking your question to ensure clarity. If you're streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Novak with Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, the first one's on generative AI. Sort of wanted to dig a little more into how you think about, your blue sky potential user and advertiser use cases of generative AI, and how do you think about the timeline from when we can first see some glimpses of those on the platform? And then the second one for Susan, just any more color on the new data center architecture and how we should think about the long-term capital intensity of the business, whether it's CapEx per minute, CapEx per DAU. How big of a long-term benefit could this change be to the overall cash flow? Thanks.
Yeah, I can start with generative AI. I think this is a really exciting area, and I'd say the two biggest themes that focused on for this year, and one is efficiency, and then the kind of the new product area is going to be the generative AI work. We have a bunch of different work streams across almost every single one of our products to use the new technologies, especially the large language models and diffusion models for generating images and videos and avatars and 3D assets and all kinds of different stuff across all the different work streams that we're working on, as well as over the long term, working on things that could really empower creators to be way more productive and creative across the apps and run a lot of different accounts. So I think there's some really exciting stuff here. I want to be careful not to kind of get too far ahead of the development of it. So I think you'll see us launch a number of different things this year, and we'll talk about them, and we'll share updates on how they're doing. I do expect that the space will move quickly. I think we'll learn a lot about what works and what doesn't. A lot of the stuff is expensive, right? To kind of generate an image or a video or a chat interaction. These things we're talking about, like cents or fraction of a cent. So one of the big interesting challenges here also is going to be how do we scale this and make this work more efficient so we can bring it to a much larger user base. But I think once we do that, there are going to be a number of very exciting use cases. I realize this is a pretty high level answer for now, but I think that we'll be able to share more details over the coming months.
Thanks, Brian. On your questions about CapEx, so your first question was about the new data center architecture that we talked about, which is underpinning the lowered CapEx outlook. So we're shifting our data centers to a new architecture that can more efficiently support both AI and non-AI workloads. And that's going to give us more optionality as we better understand our demand for AI over time. Additionally, we're expecting that the new design will be cheaper and faster to build than previous data center architecture. Along with the new data center architecture, we're going to optimize our approach to building data centers. So we have a new phased approach that allows us to build base plans with less initial capacity and less initial capital outlay, but then flex up future capacity quickly if needed. We're still planning to grow AI capacity significantly, and that connects, I think, to a lot of the things that Mark was describing earlier in his question. In terms of longer run capital intensity, we certainly expect that the lower CapEx outlook will have some incremental benefit to CapEx as a % of revenue, and that's still really something that we are focused on over the longer term. The current surge in CapEx is really due to the building out of AI infrastructure, which we really began last year and are continuing into this year. We'll be measuring the ROI of these AI investments, and their returns will continue to inform our future spend. Our intention is still to bring CapEx as a % of revenue down, but capital intensity in the nearest term is really going to depend in part on the revenue outlook and our needs to further build AI capacity for future demand.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Your line is up.
Thank you so much. Maybe I can ask a multi-parter on coming back to some of your comments on Reels. Mark, you've always had this philosophy of letting the user sort of continue to grow engagement, and monetization has always lagged sort of consumer adoption of new products. How do you think about going a little bit deeper on the mixture of letting the engagement of short form video continue to build versus eventually sort of continuing to drive higher levels of monetization against that product? Second, can you give us a little bit of color of how advertiser conversations continue to evolve around short form video and the adoption of the canvas and the utilization of that as a means to deliver a mixture of brand and DR messages? And then lastly would just be, can you quantify at all the gap that still exists between the engagement around short form video and the monetization, and how that might close as we look out over the next couple of years? Thanks so much.
Yeah, the way that I've always looked at this, I can take the first part of this, is that for these consumer products, often building up and scaling the product use case is a somewhat different discipline than working on the monetization. So it's such a kind of hard problem to build these new types of products that you want to give the teams as much clarity and as simple of goals as possible. So in the beginning, just saying, okay, just let's make something that works for people. And then, once we get to many hundreds of millions of people or billions of people using it, then we'll focus on ramping up the monetization, which has been a formula that's worked for us. That's the general approach. Now with Reels, we do have a lot of people using it now. So I think at this point, the question is there any strategic advantage to letting it scale further than would be profitable to do? And I think at the scale that it's at right now, it's not clear that there's much strategic advantage. There are certain flywheels, and you get certain more feedback or data points from a little bit more distribution, but at this point we're at pretty good scale. So I think for now the right thing to do is to work on monetization efficiency, and we know that there is demand to see some more Reels. And as we naturally improve the monetization efficiency, which I have confidence in because the teams are doing good work and that's been working. I shared the stat about it, the efficiency doubling over the last 6 months on Facebook. I think as we can continue some of those trends, then we'll naturally just unlock the ability to show more and more Reels, and it will continue to grow from there. But that's the overall approach. I do think that our philosophy of building these consumer products, focusing on getting them to hundreds of millions or billions of people, and then focusing on monetization beyond that and bringing that in as the balance is the right approach. It's served us well. You can expect us to continue doing that on future things that we do, including some, hopefully some of the new generative AI products or some of the new metaverse stuff that we're doing. We're going to take the same approach there as well.
So on the advertisers' reaction to Reels, we continue working on enabling more advertisers to participate in Reels ads, more formats, more objectives, more tools to create them, and we've been making good progress. We now over 40% of our advertisers use Reels ads across our apps, and between direct response versus brand, we're actually seeing progress with both. But direct response continues to be where advertisers are focused, and this is an example. Outlet City, which is a German fashion retailer, developed creative specifically for Reels to test its impact on conversions. And they found that Reels resulted in a 19x higher ROAS, 89% lower cost per purchase, and 9 times higher lift in sales. So overall, really good results.
On your third question, Eric, we are not quantifying the gap in monetization efficiency between Reels and other surfaces. We know it, took us several years to bring the gap close between stories and feed ads, and we expect that this will take longer for Reels. Having said that, we are still roughly on track to bring the overall Reels revenue headwind to a neutral place by the end of this year or early next year, and we're planning to do that through both improving Reels monetization efficiency and growing incremental engagement from Reels.
Your next question comes from line of Mark Shmulik with Bernstein. Your line is open.
Yes, thanks for taking the questions. I've got a couple as well. The first one, I don't know for Susan or Javier. As we think about, I appreciate the color on improving conversion rate. Would it be fair to say that you're kind of through the other side of some of those IDFA headwinds we've been talking about for the last year or so? And any more color, just kind of that journey of the AI-driven ad engine would be appreciated. And secondly, Mark, kind of diving into that annual theme of efficiency and following on Buzz's post, what's the right way to think about long-term investment intensity in Reality Labs, and kind of balancing that with the ambitions to build the next computing platform? Is this the right intensity of kind of where you're at right now to think about, or are there any milestones we should be looking for? Thanks.
Thanks, Mark. So on your first question, we are continuing to make progress in mitigating the impact from the ATT change, but this is more generally just the reality of the online advertising environment that we operate in now. So we're continuing to work on building tools that mitigate the impact of those changes, and we see strong adoption of those tools, including tools we've talked about before, like CAPI Gateway, etc. We're also investing in ways to bring conversions on site, and we have a lot of ad formats that have been instrumental in doing so across both click-to-messaging ads, lead ads, and shop ads being formats that bring conversions on site. And then over the longer run, we're continuing to invest in our privacy-enhancing technologies to more fundamentally enable us to deliver more performant and privacy-safe ads to advertisers. Javi, is there anything you want to add on that?
I think, Susan, you touched on most of it. I think if you look at the strategy on ads, it really has two parts, which is continue investing in AI, and that's where we're seeing a lot of the improvement in ads relevance. And as Mark was saying, we saw over 20% more conversions than in the prior year, which combined with the decline in cost per acquisition results on higher ROAS. We also used it for automated experiences for the advertisers, improvements on measurement, which allow advertisers to do better budget decisions. But the second part is bringing more conversions on site, which are also obviously helping offsetting this signal loss. Indeed, we're reframing the problem as a signal growth opportunity. And one example would be lead ads, where just to give another example, Additive, which is an online marketing and sales automation agency in Italy for hotels and resorts, they use lead ads to collect a higher volume of qualified leads at a lower cost. So basically, compared to off-site leads, sending the leads off-site, they managed to achieve a 2x more final bookings with on-site leads, 4x more qualified leads with on-site, lead and a 2.7x lower cost per lead with on-site versus the alternative of sending the lead acquisition off-site.
All right, I can give some color on, and I think there was a question about how we're thinking about this efficiency theme as it applies to Reality Labs over time. I guess that there are two ways that I think this applies. The first thing is I think it's important to not just think about Reality Labs as one thing, right? There are like three major areas, right? There's the augmented reality work long term, which is actually the biggest area, but is still a large research problem. There is a lot of work there that and we haven't actually shipped the product yet. VR, which is starting to ramp, right? Quest 2, I think, did quite well. We have multiple product lines there with the Quest Pro. And then the smallest by kind of budget size today is the Metaverse software program. And, it doesn't reflect the importance of it. I think, the software and social platform might be the most critical part of what we're doing, but software is just a lot less capital intensive to build than the hardware. So it's the smallest part of the program. And within each of those areas, there are a lot of different things that we're doing. So, just like any project that we would run, we're constantly learning from how the products that we've shipped are doing, how the market is evolving overall, how competitors are doing, and what reaction they're seeing to different things, and what experiments are being played out, and we're kind of constantly tuning the roadmap. And obviously, some of these are longer term things, right? So you start planning out the hardware that you're going to ship, 2-3 years in advance, but we're kind of constantly looking at the signals and learning and making decisions about what it makes sense to do forward. So that's definitely going to continue. And we will, even though none of the signals that I've seen so far suggest that we should shift the Reality Labs strategy long term. We are constantly adjusting the specifics of how we how we execute this. So I think we'll certainly look at that as part of the ongoing efficiency work. The other piece is just different tactics, things like trying to flatten the org, things like that. Those are going to apply across the whole company. So we expect that within the roadmap that we're trying to execute, both on Reality Labs and Family of Apps, we just want to focus on making all of our work more efficient. A lot of the time when people talk about efficiency, there's a lot of focus on prioritization and which big things can you cut. But I actually think what makes you a better company over time is being able to execute and do more things because you're operating more efficiently and you can get things done with fewer resources. So I'd like to kind of get us to that mode more, which I guess gets me to a higher level point in this, which is I just think we've entered somewhat of a phase change for the company where we just grew so quickly for like the first 18 years of the company's growth. And it's very hard to really crank on efficiency while you're growing that quickly. And I just think we're in a different environment now where we have a bunch of areas that I think are still extremely exciting and growing quickly for the future, where I think the right strategy will be to focus on kind of top line growth. But I think a lot of what we do, it really just makes sense to really focus on the efficiency a lot more than we had previously and making sure that we can do that work more effectively. For what it's worth, I think if we do that well, I think we'll be able to do better product work, and I think it'll be a more fun place for people to work because I think they're going to get more stuff done. So I'm pretty committed to this, and it's going to go across all of the different things that we're doing.
Your next question comes from the line of Doug Anmuth with JP Morgan. Your line is open.
Great. Thanks for taking the questions. Susan, I know the expense outlook came down by $5 billion. Just hoping you could talk about some of the areas where you may be able to get increased efficiency still. And then what does the new expense outlook suggest for hiring levels in 23? And then separately, I was hoping you could comment on the issues in Europe around Meta's use of first-party data to target ads. How could this get resolved, and how should we think about the risk to Meta? Thanks.
I'll start with the 2023 expense outlook. So the primary components of the reduction in the 2023 expense outlook are across three areas. The first is slower payroll growth. So we're continuing to scrutinize how we allocate resources across the company on this. We have a broad hiring freeze in place right now. And we continue to expect a slower pace of hiring in the year as we evaluate what roles we're going to open. I'll roll in the answer to your second question here, which is, this is an ongoing process for us. We don't presently have a hiring target to share for the end of the year. The second component of the lower expense outlook is on cost of revenue. We're expecting slower growth. Depreciation here is impacted by us extending the useful lives of non-AI servers in Q4. And then the third component is our outlook now reflects an estimated $1 billion in facilities consolidation charges. That's down from the prior $2 billion estimate that we gave in the last guidance range, since a portion of the previously estimated charges were already recognized in Q4 2022. So those are really the big, the primary issues as it pertains to the lower expense outlook. Your second question was on the issues in Europe around Meta using data to target ads. So I think if you're referring to the EU DPC ruling, that we have to change our approach regarding our reliance on contractual necessity as the legal basis for ads in Europe, that's a decision, we don't agree with it. We believe that our current approach is GDPR compliant, and we're appealing the substance of the rulings and the fines. We don't expect that those decisions are going to affect our ability to provide personalized advertising in the EU, and that advertisers should be able to continue to use our platforms to reach customers and grow their businesses.
Your next question comes from the line of Justin Post with Bank of America. Your line is open.
Great, thank you. Maybe a follow-up on the privacy and data use. Are you still facing headwinds in the first quarter, or are you kind of past that from IDFA or ATT? And then as you look out over the next year, anything on Android or in the EU with Digital Markets Act, or anything we should be thinking about or aware of? Thank you.
Thanks, Justin. On ATT, I think what I would say is there is still certainly an absolute headwind to our revenue number, that is the impact of the ATT changes being in place. Having said that, we are lapping its rollout and adoption, and we're making progress in mitigating the impact due to a lot of the work that both Javi and I just talked about, including the different advertiser tools, including ad formats that bring ad conversions on site, and including the longer term AI investments in privacy enhancing technologies. The second part of your question was on, anything from Android and other headwinds. On Android, it's too early to know where this will land. I think Google's taking a approach that is collaborating with the industry, which we think is critical, and we'll have updates as more time elapses there. And then the third part of your question, I think, was on regulatory issues in the EU. I think this was on DSA. We are expecting, we have been preparing for some time to comply with DSA and meet the compliance deadlines that we expect to come into effect this year. Those are, a meaningful but manageable segment of costs we've been preparing for a long time, and those costs have been factored already into our total expense guidance.
Your next question comes from the line of Youssef Squali with Truist. Your line is open.
Great, thank you. Two questions for me, please. First, maybe one for Susan. Just staying on the theme of the efficiency, and with all the adjustments to your cost basis lately, can you maybe just speak to the relationship you're trying to build between revenue growth and OpEx CapEx growth over time? I think the last time we saw them move in tandem or close to each other was back in 2017. So are you at a point where you'd want them to grow much closer to each other, or are we still in investment mode and therefore potentially margin compression mode beyond just 2023? And then maybe Mark, can you just provide an update on kind of the health of the broad digital ad space, especially for the SMB side and DR? Just curious if, coming out of Q4, you incrementally bullish, or you're still as cautious as, say, you were 3 or 6 months ago? Thank you.
First question. So, certainly the lower expense outlook and CapEx outlook puts us in a better position in terms of financial performance for this year. We are, I think, still, we're focused on the goal that Mark outlined, I think, last quarter of delivering compounding earnings growth while enabling aggressively in the future technology. And that continues to be the principle by which we're guiding our financial plans. The second question is on on the health of the broader digital ad space. I can start with this, and Javi, you should feel free to jump in if you want to add more color. Q4 for us, we saw that the holiday season for us fell mostly within our range of expectations. Trends in online commerce modestly improved for us, which is encouraging, but again, the growth was still negative year over year. So overall, I think this is still a pretty volatile macro environment. It's early in the year to know how this will shape up for 2023. And if there's anything, Javi, you'd like to add, you can jump in.
No, I think you covered it well, Susan.
Your next question will come from the line of Ron Josey with Citi. Your line is open.
Great. Thanks for taking the question. Mark, I wanted to talk a little bit more around the progress on the AI discovery engine in Reels. And we're seeing it in our own usage in terms of content and categories and just getting more insights and content that we'd like to see. But can you just talk about the added signal that Meta is seeing and gaining here to produce this more relevant content across Reels to Stories to Feed and maybe even to Messenger? Thank you.
I'm not exactly sure what would be useful to share here, but in general, a lot of the gains that we're seeing on the discovery engine overall, which we basically use to refer to our AI recommendation system across Facebook and Instagram, across all different content types, of which Reels is sort of a special case, and that's growing the fastest with short form video. But a lot of this is, there's not like one specific data type that's useful. A lot of the trend that we're seeing here is we're using larger models, which require more computation. We've shifted the models from being more CPU-based to being GPU-based. We've seen big improvements in the amount of time and engagement that we've gotten, and we it's a little bit hard for us to predict exactly how much we'll be able to continue tuning those and improving. But from the experience that we've had so far, I would bet that there's still pretty significant upside there. I know that you kind of asked about specific data points, but I think that that's really the theme that we're seeing, and that applies across Reels and the rest of the discovery engine. The one thing that I'd add, it's a little bit separate from your question, but we do spend most of the time talking about Reels. So I think maybe it's worth giving some color on the rest of the discovery engine work, which is has also been doing quite well and is much more incremental to the rest of the business, because if people end up being able to discover additional photos or links or groups or things like that in Facebook, or just interesting content across Instagram, then they're just more engaged in the product, and we already know how to monetize that content. So that ends up being really helpful, both for the overall engagement, not very cannibalistic at all, and already profitable. So we've spent less time talking about that because I get that Reels is sort of the faster growing area, but we do still expect that as a percent of the overall feeds in Facebook and Instagram, recommended content will continue growing. I don't know if it'll be a majority by the end of this year, but maybe it'll be 30%, 40%, something in that zone, and continuing to grow, because we can just find content that people are going to be interested in that may not be from accounts that they've followed directly. So hopefully that's some useful color on what we're seeing across those efforts.
Your next question comes from the line of John Blackledge with Cowen. Your line is open.
Great. Thanks. Two questions. Just to follow up on Reality Labs. Should we continue to expect accelerating losses at Reality Labs in 23? And if so, should we expect Reality Labs to be at peak op losses this year? And then second, Susan mentioned shop ads in the bucket of early monetization. Just any color there on how we might see that scale this year. Thank you.
Yeah. Sorry, I'll go ahead and take the first question about Reality Labs, and Javi, you can take the second question on shop ads. On Reality Labs, we still expect our full year Reality Labs losses to increase in 2023, and we're going to continue to invest meaningfully in this area given the significant long-term opportunities that we see. It is a long duration investment, and our investments here are underpinned by, the accompanying need to drive overall operating profit growth while we're making these investments. I'll turn it to Javi on the shop ads.
Yeah, so in Q4, we continue to test shop ads in the US, and we're seeing increased performance by helping direct a consumer to the place where they're most likely to purchase. So it's early to know, but we really finally saw product market fit in a test. It's of a small base, but to just give you a sense, we saw triple-digit growth in both revenue and adoption across Q4. And we expect this growth to normalize to a lower level in 2023. And the shop ads data has a revenue run rate in the hundreds of millions of dollars. So that gives you a small base, it's small revenue run rate yet, but it's growing rapidly, and we expect it to continue but normalize to more lower levels in 2023.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Your line is open.
Thanks. Two questions, please. That click to messaging at now that 10 billion revenue run rate, how do you think about the growth path for that going forwards? And do you find that that's bringing in brand new advertisers to Meta that you hadn't seen before? Like, who's coming in on that, and does that give you a new growth path? And then, Mark, if I could just ask you, this year of efficiency, this it's almost like there's been a journey going on since early last year when you talked about talking about driving the business for growing operating profit. And I guess I just want to ask the why question. I mean, it's, the markets obviously like what they're hearing from you today and the changes, but why the much greater focus on efficiency, not just tonight, but like kind of over the last, 9 or 12 months with maybe a few hiccups? Like, what is it, just the maturity of the business? Is it just trying to take advantage of a crisis? But there is a crisis out there in terms of the economy, and maybe that forced minds to think this way. Just a little bit more color on the why. Thanks a lot.
Thanks. This is Susan. On the click to messaging ads. So this is one of our fastest growing ads products, and we believe that they're bringing incremental demand onto our platform. I mentioned in my script that over half of click to message advertisers exclusively use click to message ads on our platform. You asked how we're going to scale, and I think there are a couple dimensions. In terms of demand, I think the biggest piece here is getting more businesses to adopt, click to messaging ads via creating more entry points, simplifying creation flows. We're trying to integrate with partners who can help smaller businesses scale. So there's a lot of work going on there. On the performance side, we're continuing to focus on just driving up the ROI that advertisers get from click to messaging ads. We're trying to give advertisers the ability to do more down funnel optimization, create better in-thread experiences, and simplify flows that help them drive conversion. And then ultimately, we're always focused on growing supply, and in this case, growing the business messaging ecosystem by creating more ways for people and businesses to connect across our messaging apps. So I think an example of that would be something like business directory search on WhatsApp. So it's an opportunity we're very excited about, and we've invested a lot in, and we've seen very healthy growth. I'll turn it to Mark on the efficiency question.
Yeah, so I mean, on the efficiency point, I think we come to it from a few places. I mean, one is just like the journey of the company. For the first 18 years, I think we grew it, 20%, 30% compound, or a lot more every year, right? And then obviously that changed very dramatically in 2022, where our revenue was negative for the growth for the first time in the company's history. So that was a pretty big step down. And we don't anticipate that that's going to continue, but I also don't think it's going to necessarily go back to the way it was before. So I do think this is a pretty rapid phase change there, that I think just forced us to basically take a step back and say, okay, we can't just treat everything like it's hyper growth. There are going to be some areas that are going to be very rapidly growing, or that are very kind of future investments that we want to make. But we also have a lot of things now that are just have are a lot of people using them and support large amounts of business, and that we think we should operate somewhat differently. So I think that there's that piece of it. But the other part of it that I'd say is that as we've started doing the work, I actually think it makes us better, right? And that was somewhat unexpected, right? I kind of historically would have thought that this would just occupy some amount of our mind space, and that would be more of a trade-off against how we are able to build products and get things done. But at this point, I'm actually fairly optimistic that there are a pretty good roadmap of things that we can do that will just make us more efficient and actually better able to build the things that we want. Not all of them will help save money, right? So, for example, focusing on AI tools to help improve engineer productivity, it's not necessarily going to reduce costs, although over the long term, maybe it'll make it so we can have fewer, we just hire less, right, and stay a smaller company for longer. But I do think things like reducing layers of management just make it so information flows better through the company, and so you can make faster decisions. And I think ultimately that'll help us not only make better products, but I think it'll help us attract and retain the best people who want to work in a faster moving environment. And so I don't know, that honestly was a little bit surprising, right? That as we started digging into this, that the company would actually start to feel better to me. And I don't know how long that will, like, how long the roadmap is of things that we can continue to do, or that'll be the case. But I do think we have a good amount of things like that. So that's why I'm really focused on this now. And I do want to continue to emphasize the dual goals here of making the company a better technology company and increasing our profitability. They're both important, but I think it's also really important to focus on the first one of just making it a better company, because that way, even if we outperform our business goals this year, I just want to communicate, especially to people inside the company, that we're going to stick with this, because I think it's just going to make us a better company over the long term. So I think that's it for now.
Operator, we have time for one last question.
Thank you. That will come from the line of Brent Thill with Jefferies. Your line is open.
Thanks. Susan, for your Q1 guidance, can you just remind us all what your embedded expectations are for market conditions, how you think about seasonality, what's embedded in that guidance?
Thanks, Brent. For Q1, we are, our guidance range of 26 to 28.5 billion, corresponds to -7% to +2% year-over-year growth, and it reflects, a wide range of uncertainty given the continuation of the general macro environment that we've been operating in. Again, we are pleased with the core engagement trends that we've talked about and the performance improvements that we're delivering for advertisers with our monetization work and our investments in AI. And we expect FX to be less of a headwind to year-over-year growth in Q1 than it was in Q4. But again, we are keeping a close eye on advertising demand and on the ongoing macroeconomic volatility.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again.
Okay, team, so that was the earnings call from Meta. Again, we're pushing towards 100,000. We almost have 99K. We're very, very close. The SPY just broke highs of the day. That was the end of the Meta earnings call. And so if you haven't already, hit the subscribe button, hit the notification bell. We certainly appreciate you all. We are getting so close to hitting that $100,000 target. And we're very, very close. Before we go, check out one of our sponsors. This is Chart Prime. It's a trading view indicator service. It gives you customized alerts. I'm going to preface this with I cannot guarantee you're going to make money. Nobody can. They are a sponsor of mine. I'm definitely biased in their favor. But you can see they give you support and resistance alerts, reversal up, bounce, reversal down, drop, bearish engulfing candles. You can see we get a drop after that reversal signal, range support. You can see bullish engulfing and range support. We get a nice bounce. And it's not always right. This one was wrong. But again, I can certainly use it to help find an edge in the market. It's called Chart Prime. It's a trading view indicator service. Super, super useful if you can use it correctly. But again, they are a sponsor. I'm definitely biased. I can't guarantee you're going to make money with them, but check them out. I'll put the link up. You can get 20% off if you use my link. With that said and out the way, guys, I'm going to go ahead and close it down. My eyes hurt. I'm going to give my eyes some rest. Love you all. Y'all be safe. We'll see you guys tomorrow bright and early. Again, we are pushing towards 100K. And if you haven't already, hit the sub button, hit the notification bell. Good luck, guys. Y'all be safe. We are almost at 99K, very close, within 250 subscribes away from 99K. So very, very close. Thank you guys so much for joining us. And yeah, we'll see you guys tomorrow bright and early. Remember, tomorrow we have jobless claims, Apple, Google, Amazon earnings. Friday, we got unemployment and non-farm payroll data. So we got a lot of stuff that can still move markets, guys. So y'all be ready for that. We'll see what that data looks like. Market's looking pretty strong. Snapchat trades going well. And yeah, good luck, guys. We'll see you guys later. Y'all be safe.